Bitcoin or altcoins? What should you be thinking about purchasing during the coming bull run? Let's talk about Bitcoin versus all other altcoins and discuss it through some charts. All right, guys, we're back again, and we see the markets, the crypto markets here in August 27th. They're holding up pretty well. We had a pump across the board some days ago, and usually after a pump like that, prices went up across the board at least 20% for most assets. There's usually a little bit of a cool-off period, and you can look at some charts, and people love to do this. This is called technical analysis, where you look at certain price action, you look at volume, all sorts of different metrics, and try to make decisions about when to buy or sell assets. So I want to talk to you today about a little bit of technical analysis and compare Bitcoin along with all other cryptocurrencies, which are in general known as altcoins. So let's talk about that vocab a little bit. Bitcoin was the first player out there. Now, there were some early other options, I think eCash, etc. But Bitcoin was basically the first crypto asset that solved some fundamental problems like the double spend problem. And so most people consider it the first crypto asset. And in those early days, we're talking about 2010 through 2014, etc. There were a lot of other cryptocurrencies that arose out of that time. A lot of people in the game at that point talked about stacking sats. Now, what are we talking about when we mean sats? Sats is a shorthand for Satoshi. It is the smallest division of a Bitcoin. So, of course, you can divide a Bitcoin into smaller amounts, just like a U.S. currency of $1, and the smallest amount of U.S. currency is a penny, although I think they've stopped making pennies at this point, so we have to maybe rethink that one. So people talked about stacking sats when they were in the crypto market. What that meant effectively was, although there were other crypto assets out there, most people were buying and trading those to try to effectively buy more Bitcoin. So they would buy some other asset, hoping that in the short term, it was going to outperform Bitcoin. And that way they would sell at an opportune time, and then they could go and use those profits to buy BTC. Okay, and I mentioned BTC because Bitcoin, there's a couple versions of Bitcoin. Most people just think about BTC, but there's so-called Bitcoin Cash. I'm not going to go down that rabbit hole. That's a different video, but that's the idea of stacking sats, that a lot of people in the early days, and they were probably right, that in the early days, the only thing that really mattered was Bitcoin. It had certain properties, the distribution was relatively fair, and so people wanted to buy Bitcoin. Now, if we fast forward to, say, 2017, this is when smart contract platforms and other blockchains with their own tokens started to become a little more popular, and people started to understand where this space might be going. And the biggest player there is Ethereum. So if we think about buying these other crypto assets, which again are known in general as altcoins, people that only like Bitcoin like to call them shitcoins because they think Bitcoin's the only thing that matters. I think they're delusional, frankly. When you're buying other altcoins, one of the things you want to do in a bull market is you want to consider, how is this altcoin doing against Bitcoin? Because you guys out there, you're probably trying to generate some wealth for yourself. You might not even care about, crypto and cypherpunk philosophy and holding Bitcoin versus Ethereum, etc. You're just hoping that you can make some money, maybe to put a down payment on a house, because you're probably going to trade in, even no matter what you got, whether it's an altcoin or Bitcoin, you're probably going to trade back into fiat, into US dollars at some point, so you can utilize this in the real world. Now, some of you out there also may be thinking about holding Bitcoin as a store of wealth, to hedge against inflation risks. And I think those inflation risks are very, very real. You do want to hold some hard assets. So in a bull market like we're about to enter, what do you want to do? Do you want to buy altcoins? Do you want to buy Bitcoin? Because if Bitcoin outperforms your altcoin, you might as well just bought Bitcoin in the first place. But a lot of people believe that there are certain alts altcoins that will outperform Bitcoin, at least in the short term, if not in the long run. The big question that many people have is, in the long run, will Bitcoin hold the #1 market cap spot? It's been there ever since the beginning of crypto. It's held that spot. Actually, I have to think about that. Did Ethereum flip that back in the day? Anyway, at this point, it's all about Bitcoin. So I personally think, this is a little off topic, but I personally think that crypto assets other than Bitcoin will gain a larger market cap because there are utilities behind these other crypto tokens that have real world use case beyond just a hedge against inflation. And that's effectively what Bitcoin has turned into. Never mind in the beginning it was considered the white paper mentions it as a peer-to-peer electronic cash. So I want to jump into talking about some basic things to think about when making these considerations, Bitcoin versus altcoins. And all of these considerations can fall under two general classes of thought. There's fundamental analysis and there's technical analysis. Fundamental analysis, when usually applied to things like equities, stocks, etc., you're usually digging into things like what kind of revenues are being generated by a company, what kind of assets do they hold on their books, like, do they own warehouses? Do they own real estate? All sorts of things like that. What are their liabilities? Are they in debt? All those sorts of things are part of fundamental analysis. I would say with crypto, you can't really translate that one-to-one because a lot of crypto, the way you try to think about revenue generation is a little bit tricky. And moreover, a lot of it is still speculative at this point as to what the future revenue will be generated. So I'll mention that. Technical analysis, on the other hand, is effectively looking at charts, looking at price charts and trying to make decisions as to what you should do from those charts. My perspective in both of these is what a lot of people hold is that you use fundamental analysis to determine what to buy as best you can in crypto, and you use technical analysis to determine when to buy, and of course also to sell if you're going to do that. So I want to jump into two different websites today to give you a little taste, dip your toes into a little bit of these ideas. So I'm first going to go ahead and pull up here CoinGecko. This is a website that, and some people like CoinMarketCap. It's another great website. This just shows all the various crypto assets. Let me scroll down here and just show these guys. So you can see, and they're listed by market cap. So Bitcoin has the highest market cap. You can see it there. It's 1.6 trillion. And Ethereum is at 300 billion at this point. And then Tether, which is a stable coin. It's not really, it's kind of its own thing. And it goes on from there. So I want to dig in here and let's take a look at Ethereum. So I'm going to go ahead and click and open Ethereum, the Ethereum chart. So this will take you to just looking at Ethereum, and you can see what first opens up is a price chart. And this goes all the way back to some 2016. But what we want to do here is we want to look not just we're effectively looking at Ethereum versus the US dollar. That's what we're looking at here. And I want you guys to start to dig a little bit deeper and look at Ethereum versus Bitcoin, the Ethereum versus Bitcoin pairing, as people like to say. So we're looking at the Ethereum price chart. What I'm going to do to dig a little bit deeper is I'm going to go ahead and click up here next to this little squiggly line that looks like some axes and a little squiggle there. I'm going to click next to that. It almost looks like a T with a Y symbol. I'm going to click that. This brings up a little more complicated chart. And what I can do here is click where it says ETH USDT. And I'm going to back off the USDT and start typing in Bitcoin BT, which is BTC. And what gives me a lot of options here. And I'm just going to go ahead and look at ETH BTC on Binance. I'm not sure if they have across all markets. So I'm just going to click on this one. And this shows you the Ethereum price versus Bitcoin on Binance. And Binance is a very large centralized exchange. And so this is a reasonable place to start to look. Now, when I open this up, this immediately shows me the 1 hour chart. So each one of these green and red bands, candles as they're known, these are highlighting 1 hour intervals of price. And we want to zoom way out on this. So I'm going to go up here and click right next to the 1 hour. I'm going to pull down and I'm going to scroll down and maybe let's go ahead and try to look at the monthly chart. This will be a little more interesting. And this goes all the way back now, though, because each candle at this point represents 1 month. And you can see this is ETH versus BTC. So when the candles are going up on the chart, that means Ethereum is gaining in value relative to Bitcoin. So if you own Ethereum, you're doing better than holding Bitcoin at that point. Let me zoom out just a little bit more. We're on the month. Let's do the 3 month because I wanted to see, and let's spread this out a little bit. There we go. Okay. So you can see some interesting things back here in 2017. This is when the wild bull market of 2017 occurred, where Ethereum in US dollar amounts went from like $7 to something like $1,400 in about a year, something like that. A ridiculous bull run. But not only did it beat the US dollar, it beat Bitcoin. So those people that were betting on Bitcoin being the only crypto asset, they would have been better off moving some of that value, trading their Bitcoin for Ethereum, riding this bull run to the top. And, ideally, if you could time this, which is obviously very tricky, then at the top or somewhere near the top, trading out that Ethereum back for Bitcoin, you'd be able to stack more sats, as they like to say. Now, of course, after that point, it went down. So this is showing that relative to Bitcoin, Ethereum went down. So it would have been better to hold Bitcoin. So this is what a lot of people have done over the years is they'll buy an altcoin during a bull run, figuring that there's so much speculation going on, and Bitcoin being a large market cap, the speculation and capital is going to drive up altcoins relative to Bitcoin very quickly. And then after, some amount of time or certain multiples of your entry point, go ahead and trade back into Bitcoin. And that would happen right around here on the chart, and then ride that out through the bear market. And you're going to be better off holding that Bitcoin. Now you can see what happened again. There was another bull run, the 2020-21 bull run. And again, Ethereum starts to outperform Bitcoin. And then after that point, we had a bear market from around January 22 until really today. It's still sort of the case. There was a little blip here in last summer, but you'd be better off again holding Bitcoin during these bear market cases. And a lot of people promote that in the bull run, go into altcoins, or at least shift some of your capital into altcoins. And then in the bear market, shift a large majority into Bitcoin. Now, just because that happened in the past does not necessarily mean it's going to happen in the future. And I actually think there will be some utilities, some crypto assets that will actually hold their value better than Bitcoin in the coming years, not just the bull market, but in the coming years. I think we're starting to see maturity in these other crypto assets. And I'm really speaking about smart contracts and everything around smart contracts. So that may change in time. So there's one chart to really look at. You can do this with any of your altcoins, and I just focused on Ethereum. And I think if you look at other altcoins, you can see it's even more dramatic. You can see almost every single altcoin out there at some point during a bull market or after these altcoins hit the market, they spike way up relative to BTC. And then at that point, they drop down, and the vast majority of them never recover. Okay, they never recover. Now, I am not someone that's going to say you should buy Bitcoin only and hold on to that, like a so-called Bitcoin maxi. I'm not that person, but this is something you very much should consider. Let me go to a different website now. Okay, and now I'm on a website called tradingview.com, and this is showing the so-called Bitcoin dominance chart. And here we go. Now, again, when I pull this chart up immediately, what is the time frame here? We're looking at a daily chart. So this is zoomed in way too much for our purposes. Let's zoom out. Let me take a look at this chart here. If we click out here, actually 5 years, that is not actually going back to 5 years. Let me do the 10-year chart. Okay, this is showing us at least something we can see a little more interest. So this is showing how much capital is in Bitcoin versus the entirety of all altcoins combined. Right? This is the Bitcoin dominance chart. So you can see kind of a similar flavor happening here, where if we go back to 2017, this chart is not showing those candles, by the way. It's just showing kind of this curve here. And in 2017, or rather the beginning of 2017, Bitcoin dominance was at like 95%. That means the vast majority of the capital, 95% of it, was held in Bitcoin, and only some 5% of all effectively money, if you will, is in altcoins. You can see how much difference that is. Then the bull run started, and Ethereum was a dominant player. One of the reasons why Ethereum was a dominant player were all these other altcoins were effectively built on top of the Ethereum blockchain. And if you wanted to own those, if you wanted to trade those, you had to own ETH. You had to own the Ethereum token. And so ETH just exploded through the roof. You can see what happens to the Bitcoin dominance chart. It goes way down. It went down to 51%. And then in 2018, near the peak, it was down near 37%. So all that capital is sloshing around in this marketplace. And here it's sloshed from Bitcoin into altcoins. And then wouldn't you know, again, the bear market hits all the way until around 2021. You can see this chart going up. This again is showing that more capital is in Bitcoin than other assets. And then the bull market hits again, and right around here, November, December of 2020, the dominance chart drops again. It's not as dramatic as before. There's a little more dilution. There's way more crypto assets at this point. But notice at the bottom here, at this little trough, we're down at 42.8%. There's a lot of people that expect that over a long enough time period that the Bitcoin dominance is just going to keep going down. It's going to make lower lows over the coming years because these crypto utilities associated with smart contracts are going to become more and more important, and more capital is going to flow into them. Okay, so back to the chart. It was 2021 when the market peaked, sometime around there. So you can see we're in this low, and then the bear market just continued for years now, and you can see how Bitcoin dominance goes back up again, imploring you, I suppose, to hold Bitcoin during this bear market. And now what's going on? We saw a drop here back last summer. This is, if you remember the other chart, this is where Ethereum started to spike up, and so did some other altcoins. And look where we're at now. We're not seeing quite as much volatility across this chart as going back to like 2017, 18, or even the entire bear market thereafter. So that probably speaks to the fact that the entirety of the market cap in crypto is just larger. So you're not going to get as much volatility in this space. Although I do think relative to traditional markets, there's still going to be quite a bit of volatility. Some people like to watch these charts, and I would say on your social media platforms, and I think x.com is the best place to look for crypto. Start searching out users on there, and there's a lot of people that will post charts just specifically with Bitcoin dominance chart, and you'll get their takes on what that might mean for the market, what that might mean for moving your assets around. And from my take, my personal take for you would be to go ahead and sign up at Coinbase, of course, or Binance, so you can actually buy some of these tokens. Please hit the like and subscribe and follow me for my takes, which I'm not going to tell you any particular coins today, but I've done that in the past, and I'll go ahead and tell you more about why I like those picks in the future. But there are people that just are technical analysts. They just look at charts. They're not really interested in the fundamentals behind this, and they can give you interesting takes on what they're seeing in the Bitcoin dominance chart and how you might position yourself for that. Another overall trend I would say for those of you just getting into this market is, don't try to move stuff around too fast, because every time, by the way, in terms of, I'm speaking to my US citizens here, every time you move from one token to another, that's considered a sale, and that is a taxable event. According to the IRS. So you've got to be aware that every time you're moving things around, that's a taxable event. And years ago, I used to be trading left and right, and boy, what a tax nightmare it was. I'll tell you that. So you might not want to do too much there. I would just say look for large moves if you're going to move anything. I again suggest that you probably don't want to own too many different assets. Own a little bit of Bitcoin. That's probably a good idea. And then think about some of these other smart contract platforms and the various cryptos that you'll find therein. I hope you guys found this video useful today, and I'll be back real soon with more crypto talk, and we're looking at another blip in this bull run probably this weekend or next week. I'll see you guys next time.